So don't let your eyes glaze over, or you start to get a headache. This is grade school stuff. Very, very simple. You look along the bottom here and you've got, here's time, years and months, and over time the price is fluctuating by this scale down here. This is a chart of the S&P 500, the one I've spoken about. And what's called a ticker symbol. A ticker symbol is a symbol for what it is you're looking at, is right here. And that's SPX, and they put a dollar sign before it to show you it's a ticker symbol. It shows you the time and the date that we're looking at this. And another way of the ticker is looking at right here, and there's the price. So each of these dots, this is what's called a weekly chart. So that represents 1 week. On a Friday of that week, that's where the price was on that day. So over, say, the 1st of July in 2017, the price will close for the week there, and on we go, and up and down, up and down, up and she goes. And that's really very simple. I'm sure you'd agree that's we don't need to dwell too much on that. So there's a very simple chart, but that's the basics of it. So now let's maybe put a bit more detail to this. We're going to start adding a few indicators to this chart to help us read this paper trail of these insiders. Let's trade those dots in for something called HLC bars. Now an HLC bar, HLC stands for high, low and close. On any given week or day, or whenever it is we're looking at, whatever kind of chart it is, we're going to look at one of these instead of the dots. Now on the previous chart, the dot would have been right there, meaning, well, that's how it closed for that week or that day or whatever. That little horizontal peg right there, that's the dot, but we've shown like that now. The additional piece of information we're seeing, that's the closing price, in other words. That's the C in HLC, it closed there. The additional information here is we're also seeing that during the day or during the week or whatever it is that period of time we're looking at, there is fluctuation. I'm sure you've seen this when you look at any stock trading chart. You'll notice the numbers going up and down. Well, during the period in question, there is this fluctuation, and there is a high point and there is a low point during this period. But at the end of the day or week or whatever, it closed there. There's our dot, right? But during that time, there was this fluctuation. And this can help us have a clue in terms of what's happening during the day then is where a buyer's coming in, where a seller's coming in, and so on. So a bit more information there. Let's put that on the chart instead of those dots, and we get that. It's the same thing you had before. I've changed this now. This happens to be a chart of Apple, but it's the same thing. Instead of dots, we've got those HLC bars for each of the weeks in this case. So just take a second to digest that, and you'll notice that we're really seeing the same chart. We've just got these kind of fluctuation bars going up and down now. Now that, as I said, was a weekly chart, and it says so up there because it says weekly. And you'll notice this is over several years. If we zoom in a little bit, and we want to see, I don't want to see such a long-term chart. Let's zoom in and see, so say the last 6 months. It's a daily chart, and it says so right there. That's how we know it's a daily chart, because it says. But also, if we look along the bottom, you'll notice that this isn't weeks anymore. These are days going over time like that. And we still see those HLC bars, but now each of these pegs, up and downs, is for a day, whereas before it was for a week. Same chart, only we've zoomed in now, and we see things in a bit more detail by the day, and it's still the HLC bars. So there's the big picture, there's the small picture as we zoom in. Now let's add something else to the price. We've looked at the type of charts now. We've got a weekly chart, we've got a daily chart, week by week or day by day, both with HLC bars, great. But if we look at that, it still seems a little bit kind of, how are we going to predict much from that? It does, it seems a little bit random so far. I mean, we can see there are certain things going on there. We can see there's up trends, aren't there? And there's sideways trends and so on. Let's now add something that's going to help us out a little bit more. And we're going to do something by, averages help us with everything, don't they? Let's say the average per, what's the average age of everyone watching this video right now? That might help me to say, well, if the average age of people watching this video, then I need to cover this kind of thing and that kind of thing. So that's helping me out by having like an average age. Of course, it's only an average, but it's much more helpful, isn't it, to have no averages of things. So that's what an average is. I'm sure what an average really is. In the case of a stock chart, because it's moving along in time, we need to know any given day, well, what has the average been for a period of time? So we want to say, okay, well, here's the price today, but what has the average price been, say, for like the last 200 days? That might give us some more of a clue about what the trend is here. I don't just want to see, an average. You think, well, what's that going to tell me? I can't have an average for the price for the day, can I? That's not going to really tell me much. What I need to know is, where is today's price in relation to what's been going on here? What's the trend? What's the kind of, which way is this market going? And is the current price, is that kind of literally, is it above or below average performance right now? So that's called a moving average. And like I say, we can say over how many days has the average been like that. And the ones we're going to use are the 200 day, or in the case of a weekly chart, it's a 40 week. So think about that for a second. There's something to get your head around. So how many days are there in a trading week? Well, the market is open for 5 days a week, not 7. So 1 week of trading is 5 days, not 7. So a 40 week, what kind of chart is this? It's a weekly, and we know that because it says weekly. And also we can see at the bottom here, this is much more longer term by months, isn't it? So this is a weekly chart, and so 40 weeks. We've added an average line here. At any given point on this chart, this blue line is gauging what was the average for the last 40 weeks, and that plots a point. And then you keep doing that, plotting these points, at each point asking, well, what was the average of this Apple stock for the last 40 weeks? It says 40 weeks there, moving average 40. And that plots another point. You join up all these lines that we just talked about, the points we just spoke about, and you create this moving average, which is a way of averaging out the price action at any given point. So we can see, oh, it's above average, it's below average, it's above average. So we can get a feel for how good is this, but also the direction in which things are moving. So here we can see that this price of Apple dipped a bit here. So that's kind of below average at that point in time. But what's the overall trend, a very powerful trend here, is this average line is really pointing up. So we should have been no surprise then that despite this little dip here in Apple, things kept on moving higher. As opposed to here where we kind of, we're below average here, but also kind of the line is pointing down a bit here. So this is, we had to wait for things to sort itself out here. As you can see, it was up and down all over the place. But once that average line starts getting established, it's more of a safer bet. So averages can be very helpful in terms of gauging, how things are going and which way they're pointing. If we go to the daily chart, because we're going to have the same line, but we need to translate that into days, don't we? Because 40 weeks, that's a weekly chart. We're going to look at a daily chart. We can't look at weeks. We need to look at days. So that same line, if we zoom into the daily chart, we have to convert into days, and it's 200 days. Because if there's 5 days in a week, as I said, 40 weeks, 40 times 5 is 200. So the 200 day on the daily chart is the same thing as the 40 week on the weekly chart. So there's the same chart. We're zooming in, of course, to the last 6 months. What kind of chart is this one? It's a daily chart, and it says so right there, daily, and you can see at the bottom, day by day. Each of these HLC bars is 1 day of action. But now we also have this moving average here of the 200 days, which was also the 40 week. And if you look at the last 6 months of action of this Apple stock here, you'll notice that it corresponds to what we're seeing right there. And you'll notice Apple is just bouncing off of that 40 week line and on the 200 day line here. Let's just put into place something right now. I mean, you're learning as we're going, but also I'm going to throw in some really useful tips that you can act on right away. Here's a quick cheat chart assessment trick. You probably have stocks in your portfolio or your retirement account right now, and you can right away go and look at this and see, what has this am I in a good stock or not? A quick cheat chart assessment, quick and dirty way of looking at things. Go and type in the ticker symbol to the stockcharts.com, and I'm going to show you how to get that. You go into that, and you just type in the ticker symbol of whatever stock, and then look at the price, put that 40-week on there on a weekly chart, and see, is the price currently above or below the 40-week average? Also, which way is the average pointing, just as we just saw, and then you'll have an idea of the health of what any given stock is. There it is, as we can see with this Apple chart. Let's say you're in Apple right now and you're looking at it right here. Well, we can say, great, the price is above it and the average is pointing up. That's great. This stock is in a healthy condition. As opposed to if we look at this one, and let's say this was your stock, and you type that in, you could say, wow, this was not a good thing to be in at all. The average is pointing down, and the price is below it. Really, if you'd have been nice to have looked at that here and thought, wow, this looks like trouble ahead, and get out, and you're going to see you would have saved yourself a lot of damage here. So that's a great way right now. You can act on the information you've already learned and see what kind instantly. Or if you hear a tip, let's say, or someone says, do this or do that, and come in here and you can see the truth, as opposed to looking at something like here. You could say, wow, yeah, that is a nice looking nice condition, nice looking chart. So you're already not flying blind. You're already have some idea of what's really going on, cutting through all the noise out there. And here's the truth of what's actually happening. And that's really the crunch question, isn't it? Is this thing going up or not? That's really all you're interested in, isn't it? Is this stock going up? If the answer is yes, great. Let's get on board. Let's find a way to get on board. The next thing I want to add to the chart is something called the Relative Strength Indicator, or RSI for short. So this is a percentage scale. You can see on the right hand side here, it goes from 0 to 100. Think of this as just like a health indicator. At any given point in time on the chart, we can see, relative to other things, how healthy is this? It's like 0 to 100%. It's almost like a grading you're getting here, but in real time. As well as that, you're also it's sort of giving you like trends, a bit like the moving average. You can see that the strength is trending up, or the strength is trending down. So this is just one more piece of information that we're going to use, and we can add it to the chart as follows. So you can start to see this is very simple. It's 0 to 100 here. There's your RSI corresponding to what we already saw, the HLC bars, and the moving average, which is corresponding to this picture we're getting here. We can start to see here from there. There was this rising strength trend moving up, and that corresponded to what we're seeing down here. We saw the moving average getting back on track, and that was a clue for us here that Apple's gonna come back and get back on target. The relative strength indicator, RSI, right here, and a weekly chart we're looking at here with a 40-week moving average. One more thing. It's called volume. We're going to be using volume, and in this video, I'm just giving you I'm giving you the tour. I'm showing you how to read the charts. In the next video, we're really going to start seeing, well, what do we do with this? How do we use this information? Volume, and that's how it will look on the chart. Day by day or week by week, whatever, you'll see these bars going up and down in terms of how, the kind of volume, how much kind of trading activity was there behind it. Red ones mean, well, that was all on a day when the market closed down compared to yesterday. And the black ones mean, well, that was on the price closed up compared to yesterday. Just as an additional guide there of what volume is powering, an up day or a down day. Let's put that on the chart, and there we have it. See usually along the bottom like that, up and down, volume. We'll talk more about volume, what it is, and how to use it in the next video. Let's put it all together. And there's the chart. That's the same chart we looked at right from the start. Only hopefully now, if I'd have shown you that right at the beginning, you'd have thought, wow, you've got it, what a load of gobbledygook that looks like. But now you can, and it still might not be completely familiar for you, but you can at least now look at this and think, okay, I know what this is. I can see this is a daily chart of Apple, and it's using a 200-day moving average, and here's the HLC bars, price action. Here's the volume, and here is the relative strength indicator over time. You know at least now what this is and what it's saying. And the next thing we're going to do is, what do we actually do with that information? So your next step then is quite simply go on to the next video, Learn to Trade Part 2. We'll start putting it all together, have a recap. Now's a great time to take a breather, go back and look at it again, think of anything you were stuck on and digest. So before you come into the next video, you actually, if I put that chart up I just showed you, you're not completely, what's that? Just to know what each one is. So when I refer to the RSI, I refer to the moving average, I don't, you know of what it is I'm speaking about. So I'll speak to you in the next video. Let's also now see how to actually use these charts, and by the end of that video, you will really be able to make basic trades by yourself.